Thank you very much for waiting, everyone. Now we would like to start the SoftBank Group Corp earnings results announcement for the fiscal year ended March 31st, 2022. First of all, I would like to introduce today's participants. From left, Masayoshi Son, Chairman and CEO. Yoshimitsu Goto, Board Director and CFO. Kazuko Kimiwada, Senior Vice President and Head of Accounting Unit. Today's announcement is live broadcast over Internet. Now, I would like to invite Mr. Son, Chairman and CEO, to present you the earnings results and business overview. Mr. Son, please. My name is Son. Thank you very much for joining today. So, about 2 years, we've been experiencing this COVID-19, and we've been experiencing confusion in the world, in the market, and also Russian invasion of Ukraine starting from this year. With those situations, I believe that the market and the world is in confusion. Equity market has been impacted largely. Also, we've been seeing inflation many places around the world and interest rate rise due to manage the inflation, which also again impact to the equity market. Under such circumstances, what we should do at SoftBank Group, that's something I would like to explain to you with my presentation. So let me go into my slides. In summary, defense. As I mentioned earlier, we are in a confusion in the world. Under such circumstances, we, SoftBank Group, should be taking defense position. So that's the clear position we should be taking at this moment. Just about 2 years ago, when COVID-19 started seeing in the world, we have announced 4.5 trillion yen monetization program. Also, we announced our share buyback, and we have been executing those initiatives in steady manner. Now that again, we believe that we should be taking this defense mode. There are two things for this defense mode. One is continued monetization, so that we have enough cash position on our balance sheet. And for the new investment activities, we would like to make sure to keep stricter investment criteria. So that's a kind of a summary for today. For details, I would like to use my slides to explain to you, as I mentioned in the beginning, COVID-19 and the Russian invasion of Ukraine. More specifically, 500 million has been impacted with this COVID-19. It became a global pandemic. And because of this, as a result of the Russian invasion of Ukraine, crude oil prices raised to 38%. Natural gas price became 117% increase. So as wheat price, consumer price index in United States And at the same time, the same phenomena has been seen in another rest of the world. To manage such situation, a long-term interest rate has been increasing to the certain level. Exchange rate that we've been seeing record weak yen, Nasdaq 27% down in terms of composite index. Under such situation, I believe concerns from the people about SoftBank, I think there are three things. One is the decline in equity holding value or too much debt in SoftBank, or cash position. Is it safe? Those are the three things that many people may have as a concern over SoftBank. And this is a fact. Facts are net asset value wise, we have 18.5 trillion yen with us, and loan to value 20.4%. This is a second fact. And third of all, cash position that we have 2.9 trillion yen. So these three are the facts or the answers for those concerns that you may have for SoftBank. And mainly from these three facts that I would like to explain to you more in detail of our current status. Net income, which has already been announced at 3 o'clock this afternoon, minus 1.7 trillion yen. The year before last year was negative 1 trillion, and the last year was positive 5 trillion. So 1.7 trillion negative here, but we had positive several trillion yen. So which has quite a dramatic movements from upper side to downside. But especially for this fiscal 21 full year, net income was a negative 1.7 trillion yen. More important index that we focus is loan to value and the net asset value. So these two are something that we see as a very important index. So the Vision Fund, which is mainly for our net asset value calculation, it's now down to 3 trillion yen from 6 trillion yen. So delta is 3 trillion yen. But still, to the principal we have invested, we are still seeing this gain of 3 trillion yen. So that's another fact. Those increase of unrealized gain or realized gain in total with those increasing gain has been decreased, which is fact. But still, we still have 3 trillion. But this delta is 3 trillion. So compared to 1.7 trillion negative of net income, this is dramatically decreasing. So actually, this is even more bigger issue compared to accounting loss. And that in detail by region. First of all, China. The gain we have been seeing in the past has been gone away, and now it is showing negative figures here. In Vision Funds, new investment in China has been decreasing. Therefore, risk for new investment in China has been carefully managed and studied. So that's our current position for new investment in China. So careful step does not mean zero. If we believe that there are still a lot of great companies, so for those companies we still like to invest, but relatively smaller size. In United States, that has decreased. Asia, Europe, those are also declining. So it's kind of a worldwide phenomena. Especially starting from this year, with this Russian invasion of Ukraine, equity market has been largely impacted and declining, and that has been also influencing Vision Fund's results.
Like I keep saying, rather than income from accounting perspective, NAV and LTV are more important. Net asset value and loan to value, those are the most important indicators for SoftBank Group. In terms of NAV, 18.5 trillion yen. Equity holding minus debt, that's a net asset value, which is 18.5 trillion JPY. And NAV is evaluated every quarter. And 18.5 trillion yen of NAV does not include debt owed. And our market cap as of end of March was 9.2 trillion yen. That means we are experiencing a 50% discount. Looking at the history of NAV, as you can see, compared to the peak, we have seen decline. However, we still hold plenty of net asset value. More in detail, in terms of net asset value, as you can see on the slide, Alibaba lost a lot. I mentioned earlier, Vision Fund saw a loss as well. And the Vision Fund accounted for about 50% of NAV. Up until 2 years ago, Alibaba accounted for 60% of our NAV. So our NAV depended on Alibaba in terms of NAV before, but now Alibaba accounted for only 22% of NAV. So-called China risk or Alibaba risk, we have been able to reduce reasonably. And if you take the orange portion out of this chart, you can see how bigger proportion is occupied by Vision Fund. And as a total, you don't see a huge decline. So again, before we depended on Alibaba maybe too much, but now we have been distributing and diversifying since then. And Vision Funds include 100 or so portfolio companies. So again, we did diversification. If the global market declined dramatically, accordingly, we will see loss of our value. But again, we don't depend too much on a particular country or particular company anymore. Like I keep saying, NAV and LTV are the most important indicators for SoftBank. So the second one to NAV is loan to value. The loan to value is 20.4%. That's a fact. Again, looking back the history of LTV, we listed SoftBank KK and sold a part of the shares. And since then, LTV has been constantly below 25%. Our policy is to run the business with LTV below 25% as business as usual. Even extraordinary situation should be less than 35%. That's our policy. 35% is our red zone, if you will. 35% is a third of our assets. And if that level is a third of our asset, we should be fine. But again, for business as usual, we want to keep as low as 25%. Last time we made an announcement of earning result, it was 22%. But now we are saying 20.4%. That means it's an improvement. Many people said that since the equity market declined so dramatically, our asset should have decreased. Then the LTV could be over 25%. That's some concerns that many people may have. But again, we have a strict guideline and loan to value instead of deteriorated, it improved in the last 3 months. In terms of cash position, our policy is to have sufficient level of cash position enough to take care of redemption for 2 years. When you talk about bond redemption for the next 2 years, we should have 1.3 trillion yen. Against that, we have more than double in terms of cash position, which is 2.9 trillion yen. So we are managing our business in a very secure and safe manner. The equity market won't decline forever. So when it's in the downward trend, it's important to have enough cash position under the circumstance. And the SoftBank share price has been discounted, and in fact, it has down. That means we have an opportunity to buy back our shares. And as you know, we made an announcement to share buyback. That was to buy our shares up to 1 trillion yen by November this year. And we have been in good progress. And we are now 45 43% progress in 6 months. The shares will be cancelled after we purchase our shares. Consequently, NAV per share should be better. So again, share buyback program has been going pretty well. While we are repurchasing shares, how were we able to improve loan to value? Let me explain. If you ask us, haven't you done any new investment? In fact, we did about 5.2 trillion yen of investment we made. But also, we have done monetization program for about 5.6 trillion yen. So we did both new investment and monetization. That means new investment is done with the money that we monetized. So that kind of ecosystem is working well. So we make sure that we won't affect our debt. So when it comes to new investment, we monetize first, and with that gain, we make a new investment. When we make a new investment, we usually invest in private entities. So Vision Fund makes new investment into private companies, and when private companies go listed, then we do monetization from those exited businesses, and the gain that we have will be used for new investment. Again, that ecosystem is working. When it comes to new investment, we are more selective. Why? Because we want to have a strong defense position, like I said at the beginning of this presentation. Since the world is in chaos, we want to make sure that we have plenty of cash position and we have a strong defense position. So from exited businesses, instead of making new investments randomly, we want to make sure that we have enough cash position. How do? We manage pace of investment. We are more conservative when it comes to pace of new investment. I believe that global private funds are doing the same. Why? Because listed companies' values are evaluated every day. So valuation is corrected almost every day. But when it comes to private businesses, their values are not evaluated every day. So it's difficult to change the mindset in terms of the values that they have in the private companies that they have. So if the value was higher back then, they wish investors would invest in those businesses at higher value. But when it comes to listed companies, since their values are valued every day, it's difficult to attract new investments. So again, not only SoftBank, but also venture capitals and private equity funds are in the same circumstances. But in 1 year ahead to 3 years ahead, listed companies' equity market should be improved, and the private businesses, in the meantime, will keep growing. So the balance of values and opportunity should come in 1 to 3 years. And once opportunity comes, we can resume investment in private companies. So depending on the circumstances, we are flexible, we are opportunistic. Again, now is the time for us to have a strong defense position. And when it comes to approved investment amount of Vision Fund, in fact, we have 475 portfolio companies in the Vision Fund. And compared to before, ticket size per business is being smaller. So that's the recent trend. So number of IPOs have been growing in the last 5 years. Every year doubled. But this year, number of IPOs will be smaller. That's my conservative view. So again, we keep conservatively run the business.
And this is a distribution of Vision Fund because we have 3 trillion yen of the cumulative gain. And you may wonder, are those all unrealized gain? But actually, partially that the share has been sold and we return in cash. And the distribution total is 5.3 trillion yen. Vision Fund 1 and 2 total, as you can see, 5.3 trillion yen. It's not that all of them coming to us. Actually, that some of them are going to our partners. So first, we distribute to our LPs, and then we will be receiving our based on our equity ownership. Vision Fund 1 and 2 in total, as you can see, yellow portion and orange portion, those are the return to SoftBank Group as a distribution. Not only Vision Fund, but also there are other assets or the public securities such as Sprint, T-Mobile, and some others, that those are also been sold or monetized. And in total, after fiscal 18, in the past 4 years, we have already monetized 14.8 trillion yen, either sales or monetization. So new investment, when it comes to new investment, we are recycling of those money that been monetized of our existing assets, so that we are more conservatively with this defense mode that we would like to keep ongoing. So monetization will be continued, and also with this stricter investment criteria, so that we would like to make sure not to exceed 25% of LTV, so that we can have a safely manner of the driving of our business. So up to here, this page, you may be disappointed. It's not like you, Masa. It's not like SoftBank. Are you okay? You don't want to speak more about other side. So here, we also like to share with you that we don't forget about our opportunities. So how are we going to find and when or what. Without using new money as much as possible, we would like to use what we have and find opportunity. That's something we would like to do. That mainly coming from In 5 years ago, we acquired this company, and SoftBank Group became 75% owner, and SoftBank Vision Fund 25%. So group overall that we have 100% of this company, and is kept on growing compared to when we acquired this business. With these 5 years, has been growing continuously, and actually annual ARM-based chips shipped became 29 billion chips. And this, I believe, is going to even grow exponentially. Mobile market, IoT, automotive, cloud. In each sector, each segment, Arm is actually taking a very large market share. Actually, right after our acquisition of this business, market share of mobile was much smaller. IoT was also the same. Auto was also the same. Cloud was almost zero back then. But in these past 4 years, R&D was fully invested, and from back then was the version 8, which was Arm's products when we acquired. But starting from last year, version 9 shipment has started. In the version 9 case, unit price per chip is much higher compared to version 8 in terms of loyalty. So using this version 9, for example, 5G mobile phone is almost using version 9 ARM chip. And this proportion of version 9 usage is increasing, which is also applied the same to auto or cloud. And actually, high function, high quality ARM chip has been shipping to these segments, so that it used to be flat in terms of sales, but starting from last year, second half, it is increasing dramatically, and we expect that this will grow even further for this year and next year. As a result, when we acquired this business, their adjusted EBITDA was about $800 million, and now went down by half. Back in fiscal 19, 365 million, but in the past 2 years, actually growing dramatically and almost record high in terms of adjusted EBITDA. When it comes to fiscal 22, 23, actually, we are expecting they will be doing even better, even higher. That's how I convinced this moment, because they have already a good pipelines with the major clients. And based on such pipelines, we will be able to predict the good numbers of shipments so that we can see a good picture for the business in the future. And we are convinced that it's going to making a great growth. So from version 8 to version 9. So in each version, it's been used in various products. But the key to further growth for this upgrading of version is multi-core. When you hear core, you can interpret to the one engine for one piston. So one core became 2 cores, became 4 cores, became 8 cores. So the core has been increasing. So it's like 8 pistons engines in automobile case. So just about 10 years ago, it was single core. So starting from a single core to dual core, quad core, so that the number of cores has been increasing along with this version update. And now that it's becoming much higher function and has a hyperscaler being used for cloud, automobile, those is actually now have 144 cores. So for one per chip, 144 cores are installed. So that's the kind of a product used for the cloud. So ARM CPU, actually low consumption of the electricity. However, computer power is actually, you may fear or you may wonder that the performance is inferior to Intel or somebody else, but actually that's not true. With this multi-core, by improving this multi-core, low batteries or the consumption of battery, but actually computing power is improving furthermore. More specifically, per watt. Computing power is actually the key for the cloud service or key for the automotives. And for that, we believe ARM is going to be solo players or a strong player.
Smartphone and IoT, a lot of devices will have AI capability, and cloud and automotive. It's like supercomputers running on the road. So those are the trends that we are looking at. So under that trend, ARM should be the key for further growth. Like I said earlier, SoftBank, now is the time for SoftBank to be defensive. So it's important that ARM does not need additional capital required from SBG. So from personality perspective, I want to be offensive sometimes, not always being defensive, but as the business leader, when I think about ARM's next growth opportunities, in fact, I spent a lot of my time Vision Fund and ARM growth strategy. We were talking about selling ARM to NVIDIA, but since we couldn't get green light from the regulators, so taking that opportunity, we and myself spend my energy and time to figure out how best we can grow ARM further. So in the future, when we look back, we want to be proud of ourselves having ARM in our family. ARM is making profit, and ARM does not require capex. So as you go offensive, ARM should get more return. So ARM does not require additional capital. So looking at current SoftBank position, I should spend my energy and time into ARM, which is reasonable. ARM is preparing for future IPO, and the process should proceed. One obstacle for the future IPO was ARM China. The head of ARM China sort of rebelled, and the board, even though released him 2 years ago, the decision made by the board 2 years ago to release him procedures for that decision were not going well in China, and the head of China kept control of the business, but we have seen dramatic progress in the last 2 weeks. And 2 co-CEOs were officially approved by the board, and the seal of representative was authorized by the Chinese government. With that, China's now in a normal course. So we have seen a big improvement and progress. In the past 2 years, we were not able to audit China, but going forward, audit firm will scrutinize China. With that, obstacle against ARM's IPO was addressed. So ARM's performance is good in the first place, and ARM was listed 5 years ago. So going forward, we will proceed with procedures of ARM's IPO. By the way, well, I keep saying that defense. But in mid-long term, information revolution will stop. Our equity holding and assets and our group companies, for those things that we have, the future is uncertain forever. No, I am confident about the future of our business. Let me explain why I'm confident. The internet. The revolution of internet started sometime around 1994. If the value back then was 1, Internet industry index grew by 30 times in less than 10 years. That's why many people would say that internet bubble, net bubble. In less than 10 years, the value grew by 30 times. There were net companies that did not make profits, but their valuation went up. So back then, many people say that was crazy. In fact, the market tanked. So the valuation of the internet industry tanked to 1/3, but from a big picture perspective, in 10 years, it grew from 1 to 10 in the end. It was not bad, well, worse than 30, but still, compared to 1, 10 is 10 times bigger. But from the people who bought those businesses at the time when the market cap was 30 times, and people might call someone like me a liar, and bold liar, and maybe I am hairless, but I am not a liar. Anyway, 30 went down to 10. But later, in another 10 years, it grew from 10 to 100. Again, in less than 20 years in total, the market cap grew from 1 to 100. But after the what we call Lehman shock, it down to 50 from 100. But again, compared to 1, 50 is 50 times bigger than 1. And people who sold internet businesses at the time of Lehman shock. But look at this. In another less than 10 years, the market cap grew from 50 to 2,400, or maybe a little bit over 10 years, grew from 50 to 2,400. Compared to the peak 100, it grew 24 times. And from that time, it went down to 1,800 now. So from SoftBank's perspective, Vision Fund valuation or NAV, we have seen decline, but we have seen those pink 3 times in the history, but in the middle of those pink period, whether you want to sell the stocks or buy the stocks, buying the stocks, those people were brave, and their bravery was worth doing that. And decline from 2,400 to 1,800. For me, it's a peanut. I believe that from now on, information revolution will progress further. Why? Because ARM-based chipset grew exponentially, and AI users, AI penetration, computing power, all the things have been increasing exponentially. So the number of users and computing power and cloud, value of them should not be affected by one-time fluctuation of employment or market price or foreign exchanges. More fundamentally, evolution of technology won't stop. Exchange rate, interest rate change, and change take place in a short period of time. But when it comes to change for a longer period of time, it's evolution. So look at the forest, not look at the trees. We believe long-term evolution, and we will continue committed to information revolution. To summarize, SoftBank's position is defense at the moment. Without spending new money, we also go defensive and offensive. NAV 18.5 trillion yen, LTV 20.4%, and cash position 2.9 trillion yen, which is double the amount of bond redemption for next 2 years. So while keeping defense position, we go offense without spending new money, and we keep committed to information revolution, happiness for everyone. Thank you very much.
Now, we would like to take questions. First, we would like to take questions from the floor. Please wait for the microphone and start your name and affiliation. For those who are on Zoom, please press raise hand button and wait for your name is called. If you'd like to withdraw your question, please press lower hand button. We would like to take up to 2 questions per person so that we can take questions from as many people as possible. Now, we would like to take questions from the floor. Please raise your hand if you have any. Well, thank you for your presentation, Ichikawa from Yomiuri newspaper. I would like to ask you about the investment policy. So you actually being defense. But if you keep defense mode for this fiscal year, that's going to damage your next fiscal year and on for the any results. How are you going to, do you have any measures for that? And another question from me is that equity market, especially volatility is high because of those new businesses. I think that you can help it, and I understand the situation. However, seeing such an volatility, I believe there are concerns by the shareholders. So to actually keep your performance steady, do you have any plan to increase your portfolio in public securities? Thank you for your question. We didn't stop, or we don't stop our challenge. Actually, we just make it smaller. There are some shining stars here and there, so we've been selective for investment activities. And for next fiscal year and on, we have 475 portfolio companies under the umbrella of SoftBank Vision Fund. So those companies can also grow and being fruitful for the results. So I think we are still convinced. We may not be able to have a new bullet or new pipelines for this fiscal year or the last fiscal year, but 1 to 2 years later, we believe that the public market or IPO market is going to recover from my personal view. In that moment, we believe that we'll be able to come to the offense mode once again. So we would like to well manage our defense mode and offense mode based on the situation. And to do so, loan to value, LTV, is very important. We need to keep this loan to value managing less than 25%. So that financial discipline is going to be kept, and while keeping such a commitment, or while keeping this discipline, that we would like to see the situations for our mode change. Because of private securities or private portfolio, we have some volatility. But instead, your question is, do we have any plan to do the public securities? But actually, public securities is the one that having that hit by the volatility. And the ratio of decrease in value compared to the market's average decrease ratio is something similar. Therefore, even if we have invested in public market, but still I think that the result was the same. Rather, we had a vehicle called SB North Star to diversify our portfolio, changing from the kind of fund focus or concentration for Alibaba. And as a result, actually that we have seen the decrease in Alibaba holdings. That's why that we have more diversification. SB North Star, we are scaling down. Not much activities. That's the answer for your question. Hope that answers your question.
Next question, please, from the floor. Thank you very much. From the Bloomberg. Question about pace of investment. You said that you make an investment more conservatively. If you slow down the pace compared to the previous year, how much in terms of pace and how much in terms of the amount of investment? That's the first question. And second is about ARM IPO. Timing and valuation that you are expecting now, if you could share your views with me, that would be great. Thank you. Compared to the previous year, remember that graph I showed you earlier? In the latest quarter, from December to March, compared to the previous quarters, we have made it smaller. Peak was Q1. We made investment about 2 trillion. But Q4, you see a huge decline compared to Q1. Compared to the investment we made in the last year, I would say half or even lower than half of the investment. And of course, it depends on our LTV level and investment opportunities. We strike balance when it comes to making investment. But I would say, compared to last year, the amount of new investment would be half or could be as small as a quarter. Now, talking about ARM, again, we're going to keep preparing for IPO. But the timing, well, I would say as early as possible, but I won't say more specifically. Otherwise, my legal team would give me a hard time. So I would just say foreseeable future. About the valuation, well, a lot of investment banks are giving us their expectations. While ARM's performance is pretty good, but again, before IPO, I'd rather not comment on the valuation that we are expecting. That's, again, a strong feedback I get from my legal team. Thank you.
And next question. My name is Nakagawa, Toyo Keizai. I have 2 questions. First, you mentioned earlier regarding SB North Star. So you issued the press release today. So 900 billion yen, which is unrecoverable, and 1/3 is from you. So public securities investment by North Star. Why do you think it comes to this end? And second question is the strict investment criteria. More specifically, what part you like to make it more strict when it comes to the criteria? And I'd also like to ask you, is there any financial down round of the portfolio? The reason we established SB North Star, because 2 years ago, the Alibaba value is accounted for almost 60% of our total asset. So we should diversify. And one of the ways we can diversify is the investment in private securities by SoftBank Vision Fund. But we also like to diversify with public securities as well. So that was a kind of a background for establishing SB North Star. However, public stock investment does have some risk, and also that was a new initiative for SoftBank Group as well. So that is why I also took risk of 1/3 of such, so that we can carefully manage this activity. And we did get some damage, but if we keep keep on concentrating in Alibaba, because Alibaba share price has been even declined to now about 1/3 compared to back then. Therefore, the amount or the ratio based on the share price decline in Alibaba, if we kept holding the same ratio of Alibaba, should be quite large. So amongst the market overall declines of the situation, I believe that the SB Nostar has experienced the same level of the declines in the equity value. In the mid to long term period, we believe, regardless of private or public, once that we start seeing more and more opportunities, then that there must be kind of a role that SB Nostar should be playing, so that we are not seizing SB Nostar or anything. We just keep it open, but not making a big move. We would like to carefully watching the market, and when the time comes and when the time is right, then that we will again like to diversify our portfolio with public securities through SB Nostar. And your second question about our stricter investment criteria. When we invest in private securities, this company in the industry, is there any peers which is a public company? So when you have any peers in public securities, their growth ratio compared to such trend, how much the value should be for the company, that's we call it comp. So that compare with the peer company, that we check the value, and also or business plan that this company issue. How far should we trust their business plan? That we do have some surveys or do some research that is it trustful business plan, or is it dependable business plan that we can. So by having such stricter criteria, we would like to become even more careful about the research and also due diligence for the portfolio companies. I believe that's necessary. So that is why for the fourth quarter, amount of the investment was about 300 billion yen. So it has been kind of reduced because of such a stricter investment criteria.
Wada from Nikkei paper. Two questions. First, in March 2020, you did a 4.5 trillion monetization program. Back then, your performance was not good, and it's not good either this year. So I wonder if you have a plan to do another big monetization plan. Back then, LTV was not high, but what's the difference between now and then? The second question is about IPO, ARM IPO. I believe that you plan to make it listed by the end of fiscal year 2022, but since the equity market is weak, you may not be able to expect high valuation. So do you have a plan to extend the timeline maybe for next year or further? Thank you. First, we made an announcement of 4.5 trillion of monetization program 2 years ago. And while we made investment as much as 4.5 trillion or something, also we exited or monetized about 5 trillion yen. See this slide again, please. We made an investment 5.2 trillion yen, but at the same time, we monetized 5.6 trillion yen. 2 years ago, we announced 4.2 trillion yen of monetization program. But this time, even though we don't have such announcement, as you can see, 5.6 trillion yen of monetization is being done. So again, ecosystem starts working even without making an official announcement. We constantly do monetization. And when it comes to new investment, like I mentioned earlier, for new investment, we have a stricter criteria. So in 1 year period, this blue should go smaller, and the yellow on the slide continues. From that perspective, loan to value should improve, and we have enough cash position, and we have enough financial resources to make an investment. So even without such an official announcement like we did 2 years ago, it's business as usual now when it comes to monetization. So that's, I would like you to understand how it works. And the second question is about ARM IPO. Again, ARM's performance is extremely well. Even at the pace of exceeding our internal budget plan, but market moves. So at the time of IPO, if the market then is not good enough, maybe we may extend the timeline by 3 months, 6 months. We don't have critical target. So ARM's business performance is going well, and anytime we should be ready for ARM's IPO. Thank you.
Next question, please. Thank you. Thank you for your presentation. My name is Shin from TV Asahi. You mentioned about interest rate and exchange rate. That's the kind of a one-time change, but you believe in the long-term progress. But we've been seeing the lockdown in Shanghai, in China. Chinese economy has been very uncertain. So do you see any impact to your business performance from such Chinese economy or Chinese status? Yes, if it was 2 years ago, when we just start the beginning of COVID-19, our holdings in Alibaba accounted for 60% of our assets total, but now it's 20%. Actually, other than Alibaba, it's accounted for 80%. And also, Chinese portfolio, Chinese companies in Vision Fund portfolio is decreasing as well. Actually, other than China, portfolio is a majority for Vision Fund investment too. So in the past 2 years, actually, we've been receiving quite a large impact from China or Chinese situation. But for the future, because we have reduced the China dependency amongst our portfolio, therefore, we believe we don't have to worry too much about the situation in China. Actually, the reason is because the exposure other than China is majority now. Net asset value, loan to value, those calculations, is value as private securities, so that this is very conservative calculation for net asset value and loan-to-value now. Once go public, then the value what we calculating now for net asset value and loan-to-value will be much improved. That's how I see and convinced. So that proportion actually is going to be taking more compared to Chinese concentration, because will be probably, I assume that is going to be the largest exposure amongst our portion.
Kurimoto from Nikkei paper. 2 questions. First, China risk. So you don't have a plan to further reduce China exposure. And secondly, what would be the most appropriate distribution in terms of regions? And second question is IPO. Even after IPO, would you like to keep control of ARM, and how much you anticipate? And ARM's IPO might have some impact on your financial position. So what's your view? The first, China. Mostly Alibaba, again, declined from 60% to 20%. That's our dependency to China. And of Vision Fund, cumulatively, I believe that China exposure to less than 20% as of now. And for new investment, even smaller. So again, dependency on China keeps less and less, and other portion will be bigger and bigger. For ARM's business performance is pretty good. And even if IPO gets delayed by 3 months, 6 months, even further, our cash position is 2.9 trillion yen, and we have strict criteria for new investment. So excess capital will keep piled up. So again, even IPO gets delayed, which I don't believe, but even if IPO timing gets delayed, so what? From my perspective, it's not a big deal. After IPO, SoftBank 75%, Vision Fund 25%, that's the current holding. And of Vision Fund, about half is held by SoftBank as a common stock. So SoftBank's control should be there even after IPO. So majority stake will be still kept by SoftBank even after IPO.
So I will take 2 more questions from the floor. After then, we would like to take questions from the Zoom. My name is Sanda from Nikkei Business. I have 2 questions as well. First is a technical confirmation I would like to make regarding the financial policy. So after April of this fiscal year, market is volatile. And LTV, latest LTV figure, if you can share with us as of today, that's something that very helpful. And cash 2.9 trillion yen. How much are there for the commitment line? If you can share with us, I would like to hear. My second question is a kind of a big picture question. In the very last page of the presentation, you are looking at kind of a bird view, and you are taking a big picture for the future. So when it comes to such a big picture, in the past 3 months, because of Ukraine situation, economics or economies or securities framework may change. But will those be gas for your AI revolution or brake for your AI revolution? For LTV, we disclose every quarter basis. So that's a policy for the company. So we don't share with you in the middle of the term. But as of March and as of today, not much difference. That I can say for now. So it's not that deteriorating heavily or anything. Actually, mid to long term, we are expecting to be able to improve the situation. And commitment lines for the of the cash. About 450 billion yen under dollar currency, and we haven't used any credit lines in Japanese yen credit lines. And for long term, even if we can see some ceasefire by Russia, but the economic sanction may continue. So this is not something all of a sudden disappear. We believe that this factor for inflation may continue, and I do expect the continuous increase in rate. That's how I see in conservative way. Under such circumstance, world or the market start building in those new situation, supply of new type of energy source like shale oil. So that kind of shifting is going to be happening. Oil, gas, electricity in the coming 1 to 2, 3 years. Based on new situation. And assuming such situations continue, the world is going to be adapting the new energy source or new methodology. Then those volatility is going to calm down. So that's something that we have seen in the past. So the people's wisdom will be used and also developed based on or adjusting to the new situation, so that I don't believe we need to be pessimistic forever. But at the same time, having said that, I don't think this is going to solve in a short-term period. That is why that I believe we need to be in defensive mode in the meantime. But when it comes to technology revolution, I believe this is going to be even more developed going forward. After COVID hit, online demand has increased dramatically. And such a revolution is irreversible, so that people start using much more online shopping, online education, metaverse, online entertainment. Those kind of things is going to be online, and that use will be increasing or evolved furthermore. And even in other ecosystems, I believe that those will be changed or replaced to online basis. That's how I see the future going. So that's why I think information revolution in this industry it will be developed, not depending on traditional method or traditional way. I think evolution will go on. That's why I think the ARM's importance or internet AI's role is going to be even more greater.
A last question from the floor. Oda from GG press. Two questions. First, your prospect for the market. You said that we don't have to be pessimistic forever, but the tech companies in the Nasdaq market have been hit dramatically. So how long will it take, and how do you think are they going to get improved? That's our first question. The second question about the Twitter bought by Elon Musk. So from your perspective, what's your view as an investor? And is there any possibility that you get engaged, whether it's an investment or not? First, to your question about market forecast, the bubble of the net companies and Lehman shock, at those huge events, how much the equity market lost value? It went down by a half or to 1/3, but they got rebounded and even rebounded further from the previous peak. And compared to traditional industries, high-tech industries got rebounded remarkably. Growth companies have better leverage in terms of multiple. So for those growth stocks, they may hit hard or harder than traditional industries. But when it comes to rebounding, not only coming back to previous peak, but further, they get even more in terms of value compared to the previous peak, because things get adapted to a new normal. So again, for the next 1-2 years, maybe the market continues to be in chaos, but after that, it should get rebounded dramatically. Well, looking back, the corona pandemic, so again, tech companies were hit hard, but they got rebounded dramatically when the COVID-19 pandemic gets stabilized. So I believe that tech companies will get rebounded even more than before. Now, about Twitter and Mr. Musk. I think Mr. Musk is a great entrepreneur, and he is one of the most respectful entrepreneurs to me. And he, I think, can grow Twitter in his own way. But from SoftBank's perspective, whether it's a direct investment or not, at the moment, I don't have any plan or any view.
Now taking question from online, Zoom participants. To avoid any echoing, please make sure that you don't connect to other live streaming other than Zoom. So we would like to take a question from Katahira-san, NewsPicks. Yes, thank you. This is Katahira from NewsPicks. SoftBank Vision Fund 2, I have a question about them. Looking at the financial statements, seems like the exit amount after investment is negative. What is the status or performance result for the Vision Fund 2 activity so far? And also, how do you feel about that? Vision Fund 2 is slightly negative, I think. In principle, investing in private securities, but because public market is declining in value, even if they haven't had any down financial round, but because we voluntarily decrease the value of the companies along with this peer comparison. So that's because we are being conservative for the view on Vision Fund 2, and the new investments in Vision Fund 2 that we reduce the value for the calculation 6 months or 12 months or 18 months since the investment was made. And they haven't have any up rounds yet. So when you don't have any new up rounds, meaning the situation is flat, but the peer public names comparison and reduce the valuation along with that. So that's why you see some negatives in the results. For Vision Fund 1, they have already spent 3 to 4 years after our investments, so that they have experienced some up rounds or IPO events. So that's why that they are resulting in some negative. But because Vision Fund 2, it's just it's not yet spent enough time. So that's why, along with this comparison compared peers, that we have increased the value of those.
Thank you. Next, from the Zoom, Mr. Owada from Nikkei BP. About information revolution, happiness for future, everyone. To that, you mentioned that technology fundamentally keeps evolving, but when it comes to happiness for everyone, how much technology can contribute to make people happy? What's your view? Because of the war and COVID-19, there are a lot of people struggling around the world. So how do you help making them happy? Thank you. Every act by humans may not end in something happy or pleasant. There are always some challenges and problems like traffic accident, diseases, like wars. But for those problems occur with information revolution, solving those issues or problems at higher pace, I think information revolution should help in solving problems faster and better. For example, development of vaccine and drugs for COVID-19. Thanks to AI technology, the development of vaccine were successful in a very shorter period of time. Usually it takes as long as 5 years, but less than 1 year, a vaccine for COVID-19 was developed. Without AI or without information revolution, we could not have had drugs or vaccines for COVID-19. Via Bio, for example, which we bought, the company have developed drugs for COVID-19, and they went through medical test, and they've got authorization by the regulators in the U.S. and autonomous driving goes deeper and deeper and gets wider and wider. And I believe that the traffic accidents will be less and lesser. For example, in Japan, a lot of aged drivers may cause traffic accidents, but with AI and autonomous driving technology, even aged drivers can drive without causing traffic accidents. And for war, well, pressing the button of a weapon is done by a person. So long as people are on Earth, maybe there always will be a war, but information revolution, I believe and I hope it should contribute to people's happiness.
Thank you. Thank you very much. For the interest of time, this was the last question for today. Thank you. Thank you very much for your participation. So this concludes the SoftBank Group Corp earnings results announcement for the fiscal year ended March 31st, 2022.